of the ongoing Russia-Ukraine war, escalating conflict between Israel and Hamas have threatened to spill over in the Middle East. Yet against this backdrop, defense names have failed to see significant upside. The sector's underperformed the broader market this year, but there could be opportunities ahead. We're helping you navigate the big picture with the Yahoo Finance Playbook. And to discuss, we're joined by two senior analysts covering aerospace and defense, Ronald Epstein from Bank of America Securities and Jason Gursky from Citi. Guys, thank you so much for being here. It is a dense issue, but one that is important to sift through when we look at these particular stocks. Jason, I want to start with you, because if you look at the U.S. Department of Defense budget here, it's still going up and to the right, so to speak. It is still growing. Why have we not seen U.S. defense stocks benefit as much?
Well, it's all about expectations and what the budgets are going to look like going forward. And I think they look at a couple of things that have, given some pause to investors here of late. Part of that's the setup that you just had leading into this conversation here, right? The potential crowding out effect of higher interest costs. We've got choices here, right? At the federal government level, we can raise taxes. We can, decrease spending in other areas as interest costs become a greater percentage of the overall budget, or we can reform ourselves, particularly on what's deemed to be the third rail of politics, which are the entitlement programs like Medicare, Medicaid, and Social Security. So that's one area. It's the crowding out effect, and then the second part of it is political dysfunction, and just watching what's going on in D.C., seeing elongated periods of time in which it takes to get a budget approved, seeing things like debt ceilings getting threatened, going over some sort of gigantic cliff, committing suicide kind of thing, and then budget caps, coming out the other side of these things that oftentimes, at least in the very near term, kind of ruin sentiment around defense spending, because suddenly investors are afraid that there are artificial spending caps put on defense spending. So those are the two things. It's the crowding out of interest expense, and fear around the political dysfunction in D.C.
Ron, let's bring you in here as well. Maybe we'll just start big picture, Ron. Broadly, when you look at your coverage universe, Ron, U.S. defense names, how bullish are you on the sector, Ron, in the kind of near to intermediate term here?
Yeah, I'm actually quite bullish on the sector. If you look at the defense stocks during presidential election years, or if you go back to 1980 anyway, and you were to look at, say, a basket of defense stocks, they tend to outperform during presidential election years about 80% of the time. And when they do, they tend to outperform by a wide margin, almost over 1,000 basis points. And if you take out a couple of years that were just kind of massive years, it's still hundreds of basis points. And if you peel back the onion on that, during an election year, typically they outperform in the second half of the year, and the bulk of that happens in the third quarter, so no surprise around election time. So when I look at the underperformance of the sector relative to the broader market, and maybe even things like commercial aerospace in the first half of the year, I think the setup into the second half of the year is actually pretty good. And then when you look at the outlays from the U.S. Treasury, they're a good coincident indicator for the sector. They've been up and accelerating. That's good for the defense stocks. So yeah, my stance here, particularly kind of short term into the second half of the year, is actually quite bullish.
So it sounds like both of you see some scenario for upside here. Jason, in terms of the stocks that you think are perhaps best poised among the largest aerospace and defense companies, I know you're looking at Lockheed and General Dynamics. What is differentiating those two?
Yeah, the first thing I'd say out of the gate here is I am on board here with Ron's thesis that the back half of the year is going to be pretty good for defense stocks, because I think we are going to begin seeing the backlogs that have grown here, 15% over the last few years, begin to make their way through the revenue streams. And importantly, I expect margin expansion to become an investor narrative as we move into the second half of the year, because these companies are starting to roll off the pre-pandemic backlogs that they had, where they had to absorb inflationary costs, as well as supply chain bottlenecks that led to higher costs for them all over the last few years. Those contracts are rolling off, signing up new ones that better reflect the current cost environment. So we've got accelerating revenue and accelerating margins as we move into 25 and beyond. So I think that's going to be good. Now, as far as Lockheed is concerned, look, this one right now is kind of all about the F-35. That aircraft is not delivering today in light of some technical issues they're having with the software on that aircraft. That should work its way out here over the next 6 to 9 months. And I think investors will breathe a big sigh of relief when that happens. I think that's an identifiable catalyst for Lockheed in the second half of this year. And look, as far as GD is concerned, ship budgets have gone quite a bit higher here. We got a lot of work ahead of us. The supply chain bottlenecks that I just talked about are getting better. That'll benefit GD. And then these guys also own a bizjet manufacturer called Gulfstream that just introduced a new product. And I think we're likely to see accelerating revenue and margins in their aerospace segment as well. So here again, pretty constructive on both these names.
And Ron, another question I had for you, I'd be real curious to get your take on this, is, how venture investors, Ron, have discovered defense tech startups and they've moved in. Mm-hmm. We had Anderl's Palmer Luckey on the show, and it's impressive what he and his team, the portfolio they've built out, Ron, in a short amount of time. How much competitive pressure do you think these kind of smaller, nimbler defense tech startups actually pose to just kind of the bigger, more established names you cover?
Yeah, I mean, they will potentially pose pressure one day. They're not there yet. However, they are gaining some share. I think a couple really notable things. There were a couple contracts that were just awarded by the U.S. Air Force recently. One was for the so-called Doomsday aircraft. Boeing was up against Sierra Nevada Corporation. It's a privately held company, and Sierra beat Boeing. There's another one that was out for something called the CCA, the Collaborative Combat Aircraft. That was won by Anduril is one of the companies that won it, and General Atomics was. Anduril is one of the new kids on the block, and General Atomics is a privately held company. So you've seen some privately held companies and some startups gaining some share. Now, it's just small pieces of the larger industry, so we'll see where it all goes. But what these new companies are bringing to the DoD is, I think, a fresh approach to defense contracting, a focus on software, a focus on the interplay between software and hardware. That is to say, building hardware around software as opposed to stuffing software in hardware. And we'll see where it all goes. But if I were at one of the big contractors today, I most certainly would be looking at Anduril, Shield AI, among others, as a potential threat down the road.
Well, and sort of on a related point, Jason, do you think that these large defense contractors are doing enough internally to innovate, to keep up with some of these upstarts, or do you think we're going to see some of the startups being snapped up, being acquired by the public companies?
Yeah, probably more the latter, to be honest with you. I mean, they all have, corporate venture capital arms. They are, looking to partner with smaller companies, looking for technology plays. Just kind of like Cisco did back in the day, or some of these tech companies have done back in the day, right? They use M&A as their R&D budget. So I think this is very well could be the way that it plays out here in the defense world as well.
Ron, quickly here, I'm just interested to get your take on Rocket Lab. Rough start, Ron. It's at about 20% so far this year, but you say it's a buy, Ron.
I do. Yeah. I mean, there was a whole cohort of SPAC-funded space startups that many of them, were, how can I say, very, very early stage, weren't quite ready for prime time. Rocket Lab is the real deal, and Rocket Lab currently is working on a new rocket called the Neutron. They are going to, test fire the engine for that rocket called Archimedes in the second half of the year. And once they test fire that engine, and that's will bode very well for Neutron. Once Neutron goes into service, which is supposed to be sometime, say, in the middle of next year, that'll be a competitor to the Falcon 9. And we've seen how successful SpaceX has been with the Falcon 9. This will be another medium lift launch vehicle that will address that market. And there's plenty of launch, there's plenty of demand for launch in that segment of the market. So this is potentially a game changer for the company. So yeah, when I look at what Rocket Lab is doing, they're doing some really amazing, innovative things. We have a buy on them, and it's one of the smaller companies we follow that I think is quite interesting.
Guys, really good actionable stuff for viewers. Appreciate it. Ron and Jason, have a good one.